Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the daily time frame, where we are looking for a finished three-wave corrective structure to the downside and want to see continuation to the upside. Here we're looking for a zigzag, which is a 5-wave structure in A, 3-wave B, and a 5-wave C, where the most common target area for your wave C is hit. After this low, we then want to count impulsive structures on the 1 hour time frame. So let's move to the 1 hour time frame, and there is only 3 structures that you have to know. An impulse to the upside, 1, 2, 3, 4, 5, no overlap allowed between a wave 1 and a wave 4, and a wave 4 should not retrace to the 0.618 taken from the low to the high of your 3, which has happened here. So a normal impulse to the upside, 1, 2, 3, 4, 5, is invalidated. On the number 2 spot, you can have a diagonal structure where this is 1, 2, 3, 4, 5, but it is way too early at the moment to call diagonals. Preferably, you're only looking for a diagonal when a wave 4 is soon to be finished. So therefore, at the moment, your highest probability, most bullish scenario would be a double 1-2, where you then have a wave 1, flat in 2, another one, a zigzag in 2, and you look for continuation to the upside. The most common target for your wave 2 is between the 618 and the 786 on my chart, taken from the low to the high of wave 1, and that gives you a target between 57.6k and 56.3k. The 886 is a very rare target for a wave 2. You don't want to hit this at 55.5k, and if you do, it reduces the probabilities for this scenario. Now, this scenario in general is starting to be a little bit awkward. We definitely want to have a low in very soon and see a very strong impulsive move towards the upside, because we're looking for a big wave 3, 1, 2, 1, 2, and eventually a big wave 3 to the upside. And the reason I say this is because of time. You see 2 vertical lines on my chart, and these vertical lines are fib times taken from the start to the end of your wave 2 in blue to the end of your wave 1, comparing blue wave 2 with the white wave 2. Now, it is important to note that the blue count is a higher degree wave count, right? So you have 1, 2, 3, 4, 5, and inside wave 3, the lower degree count in white, 1, 2, 3, 4, 5, and preferably a lower degree count is a bit shorter in time and price compared to your higher degree count, because that's why we have Elliott wave degrees. Now, it is possible, of course, that a wave 2 can be longer than your higher degree wave 2, especially if your higher degree wave 2 is, for example, a sharp zigzag structure, and your lower degree wave 2 becomes a WXY, which is a more stretched sideways corrective structure, generally takes more time. However, in this particular case, we are now nearing the 3 fib time, as you can see, and a lower degree wave 2 that is 3 times longer in time than a higher degree wave 2 is not really what we enjoy to see. So therefore, we have to at least be aware of this being an ABC and more corrective structures, which I'll show in a second. Now, the invalidation is very clear. That is the low over here at 54.5k. And what I like to see in this particular case is price to find support, range and grind towards the upside, build some 15-minute time frame bullish structures, impulse, diagonal, double 1, 2, and preferably also supported by continuous bullish CVD divergences. I'll show CVD in a second, right? So that's something that I'm going to keep an eye on. Now, we are currently at support. The blue box here is hit, that blue box between 57.9 and 57k. We still have a daily naked point of control in this blue box, which hasn't yet been hit at 57.150. So that is at least another level to keep in mind. If we do come down once more, that daily naked point of control is very interesting support. The second bullish scenario on the daily time frame is a unfinished 3-wave corrective structure, after which we then also look for continuation to the upside. And in this particular case, preferably your low is in, and that is because of the target area for your wave Y. The most common target area for your wave Y is the blue box here on the chart, taken from the start to the end of W to the end of wave X, and as you can see, it's hit and nicely respected. However, the 1.618 is a rare, very uncommon target for a wave Y. And we do know that in a wave Y, you can have a zigzag ABC, you can have a triangle, or you can have a flat ABC. Now, a flat at the moment, moving above your X here and then down, looks very unlikely. And a zigzag ABC will move wave C far beyond the 1.618. So it's not great probabilities to see that happen in a wave Y, which then leaves us with the triangle I have on the chart, where your low is in for wave A, you have a 3-wave move up in B, an ABC, and then you look for a C, D, E, and then you move towards the upside. The invalidations are on the chart. The invalidation is the low here at 49k, and if the high of B is in, which it might be, no pun intended, then at 62.7k you have another invalidation, but for now I just keep it on the high here at 70k. Now let's observe this triangle in a little bit more detail. First of all, it is important to know that in a triangle, 4 out of the 5 waves has to be a simple zigzag structure in a 5-3-5 ABC up or a 5-3-5 ABC down. If one of the waves is not a simple zigzag structure, it is most commonly wave C that turns into a double or sometimes even a triple zigzag, but that is very rare. If not wave C, on number 2 spot we have wave D being complex, or wave B on the 3rd spot, but that's very rare. So most commonly wave C. Now you can see that then inside wave A we need to count this as A, B, C. Okay, perfectly fine. Then we have wave B, A, B, C to the upside, hit the golden pocket taken from the high to the low of A, which is a common target for the subwaves of a triangle, which is the reason why also for this wave C I put the golden pocket on my chart taken from the low to the high of wave B. But what you can also see is, yeah, okay, you know, we want a 3-wave structure in a wave C to the downside. However, if we count a simple A, B, C, we are not even close to hitting the 618, right? So preferably your wave C turns into a complex structure where we then have a W, X, and a Y. And when we look at the support and resistance areas, this can be very interesting. Potentially looking then for one more low towards the daily naked point of control, a 3-wave structure to the upside towards resistance, this blue box, 60.6k to 60.9k, and then look for price to move down once again. We have a blue support box here, 54.6, 55.2, potentially just below the golden pocket. We have another blue box here, 52.3 to 52.9k. So we definitely have some support to the downside, but also very interesting resistance to make the high of a wave X. So here we then look for a WXY inside C and then a simple zigzag in D, in E, and continuation, where quite commonly your wave E is overshooting the AC trend line, moving just below, acting like a potential breakout, but then reverses and we continue the bull market towards the upside, as this then is the end of your wave Y, and then you want to see another 1, 2, and off we go, right? You want to see continuation of the bigger trend. Now, if we then finally look at the most bearish scenario, where you do take the low, we're looking for an impulse down in a double 1-2. We have a wave 1, 2, 1, 2 impulse towards the downside. Inside wave 1, we again have a leading diagonal, 1, 2, 3, 4, 5 wave structure, and it is known that after a leading diagonal, you do like to see a deep retracement, which for a wave 2 would be a golden pocket or a 786. The 886, of course, is also a deep retracement taken from the high to the low of your 1, but the 886, even after a diagonal, remains a very rare target, right? So that is something we don't like to see in a 1-2, and just because price hit this 886, the probabilities are higher for all of this price action to be corrective and not impulsive. In other words, the probabilities are higher for the other two scenarios on the daily compared to what we're looking at here, but we have to at least be prepared, because a good Elliott wave analyst always has a bullish and a bearish scenario. Now after your wave 2, which then is a 3-wave complex structure here, we look for another 1-2 continuation down. Common target for your wave 2 is the blue box, taken from the high to the low of 61.9k to 65.5k, the invalidation 70k. After a 3-wave corrective structure in wave 2, you look for price to move down, where minimum target would be the low 40s, but it is incredibly likely you are going to move way into the 30s. And if we then zoom in to this wave 2 here, there's a couple of scenarios possible, and this might be a little bit tricky, but it's because of price, not because of me, right? I'm trying to explain the best way I can. So the reason it's a little bit tricky for the bears, right, is you have a 3-wave structure up in a bearish scenario. If you're looking for wave 1 and 2 and a 3 to the downside, right, you want to see a corrective structure to the upside, so an ABC here. However, an ABC gives opportunity to 3 different scenarios. Now, I won't go through them in a lot of detail, right? But you can see what the general movement of price is going to be, right? And the invalidation, again, is price moving above here, 70k. So you have an ABC to the upside. Your most bearish scenario is a 1, 2, 1. Look for a retracement back in a wave 2, right? Same target area as wave X over here. Very interesting resistance. But then you're going to be looking for price to move impulsively to the downside. 1, 2, 1, 2, big wave 3. What we want to see in that case is even more big bearish CVD divergences over here. Alternatively, you are looking for sideways structures, WXY, right? A WXY, in this case a zigzag, an X, and for example a flat, Y finished, continue to the downside, or a sharp WXY, which is a zigzag, corrective structure, another zigzag, and then down, right? These are the 3 options we have at the moment. It is not clear at all which one of these structures in the most bearish scenario, where you look for 2 and a 3 down, has the highest probability at the moment, because we don't have that information. Preferably, we look at least for a short little bounce on a 15-minute time frame, hitting support, maybe daily naked point of control, and then see what's up. Move to the downside once again, and that is when we can observe in more detail what we might get in the most bearish scenario. But it has to be said that, again, on the daily, the most bearish scenario doesn't have the highest probabilities at the moment, right? So that also lowers the probabilities for any of these 3 structures here. If we look at the CVD divergences, then the bearish CVD divergences here played out, lower high on price, higher high on the CVD. Now, what I mentioned over the weekend as well is if we go to the 15-minute time frame, right, this bearish CVD was initially not interesting, because we had multiple bearish CVDs with this high here, lower high on price and higher high on the CVD. You can see it here for yourself on yellow. This high here created a CVD divergence with this high for the 4th time. So not too interesting. But what was interesting is that on a low time frame, if we go to the 3-minute time frame, after the high was made here, which was against our resistance, we moved down with bearish CVD divergences. Bearish CVDs played out. Bearish CVDs played out. More bearish CVDs played out again, right? More bearish, and etc, etc. You get the idea, right? So that was very, very interesting to increase the probabilities to move down. And because of the 3-minute bearish CVDs that we had over here, it increased the probabilities of this bearish CVD to play out and take out the low. And now we are at support, right? So very interesting. We don't at the moment have any bigger bullish CVD divergences going on, but also the bearish CVDs have played out on a 15-minute, 1-hour time frame. So we got to be patient. If we then look at the news, we have some news this week, actually quite a lot. So first of all, tomorrow, 2:30 p.m. Central European time, then also on Wednesday, also on Thursday, and also on Friday. We have news. As you can see, all the times are Central European time, so make sure you trade safe, because it might be a very volatile week. If we then look at the probabilities of the different scenarios, Then at the moment on the daily time frame, the probabilities are higher for the bulls compared to the bears, right? So the bullish scenarios ABC, WXY on the 1 hour time frame, as it stands, the probabilities are higher to take out 63k first instead of 49, but we continue to observe local price action, of course, right? And on the 50-minute time frame, the probabilities are higher to look for support here and a local bounce towards the upside. Interesting to note, of course, is the daily naked point of control still below us at 57.1k as an interesting level of support. And finally, it has to be said that, of course, the longer price is going to range sideways here and creates more lows, the lower the probabilities for a double 1-2 become, increasing probabilities for an ABC and therefore the triangle structure or the more bearish scenario. But at the moment, these are the probabilities that we have on the chart with the current information. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.